What's good, guys? It's your boy K to the AYFXGH, and I'm back again with more educative videos. Let's get it. Alright, hello guys, welcome. Okay, so this is KFXGH. In this short video, guys, I'm going to make this video very short, trust me, very short video. So in this video, I'm going to show you how to trade volatility index. This is exactly how I trade my volatility index. It's very simple and very effective. Okay, so we are going to look at two main things. The first one is the falling arrow, and then the second one is the rising arrow. So without wasting much time, let's look at what the falling arrow is. When we say falling, what do you mean? That means the thing is, going down. Okay, so this red arrow you are seeing here, as you can see, we started drawing it from here, and then the head is here. That means the arrow is falling. Okay, so it's a falling arrow. So whenever you draw an arrow and it's a falling arrow, that means you are looking for sell trades. Okay, so let's assume this is price started from down here, and then price started moving all the way up, and then it gets here, and then it starts coming down, reversal. Okay, and then after that it pushes up again, but then the push up is a bit shorter than the first one. Okay, so you keep monitoring. So this push up is shorter than this, and then it drops back again, then you get another push up. Okay, and then it's shorter than the previous one. Okay, so you are looking at it. So once you see something like this, first, second, third, all you have to do is you connect the tops. Okay, so that is why I have this line here. So I simply put this line to connect the tops. So I connected this top with this, and then this with that, and then I extended it. Okay, so once I get first touch, second touch, third touch, all I'm looking for right now is I'm looking for sales. So when I get price dropping somewhere here, I'll start selling. Okay, barcode, I'll start putting a lot of sales there, because I know that price is going to drop, it's going to fall. Okay, it's going to melt. So I put a lot of sales here. Price comes down, sometimes you get another push up again, which won't really get to the trend line, which is the falling arrow that you have drawn, and then the next thing you see is a long push down before maybe price will start going back up again. So this is for quick scalping. It's a strategy for quick scalping. Once you enter the sales at the top here, you wait for a drop. Once you get the drop, you collect your profit and you're out of the trade. Oh my god, wow! Now, how to know that price is not going to move your way? Once this arrow, this red arrow, gets broken, so let's say price comes all the way up here, and then the arrow gets broken, you get out of the trade immediately. Okay, once this red line gets broken, you get out of the trade. Okay, but once price is still below the red line, what do? You keep looking for sales, you sell. Okay, so we are done with the falling arrow. Let's go to the rising arrow. So this is the rising arrow. Okay, so it's just the opposite of the falling arrow. As you can see, we started drawing the arrow from down here all the way, we extended it up here. So as usual, this is price. Okay, this is price. So price starts moving all the way from top, and then it comes all the way down here, and then you see a reversal. You are still looking at it. Guys, 80% of trading is just staying, looking at your screens and not doing anything. 80% of trading, I repeat, is just staying, looking at your screen and not doing anything. All you are doing is just watching price, looking at what price is doing, waiting for a particular structure to be formed, and then you can base your entries on that particular structure. You can say, okay, I've seen this thing happening. Okay, this thing keeps happening all the time, so once I see it, this is likely to happen. Okay, game is a how do you call it? Trading is a game of possibilities. Okay, what is the possibility that price will move up? what's the possibility that price will drop or move down. Okay, so you weigh the two options and then you go for the one that is big. Okay, so if the possibility that price will go up is bigger or is higher than the possibility that price will drop, then what do? You start looking for buys. Okay, so when you see something like this, the possibility that price will move up is way higher than the possibility that price will drop. Okay, so you see this price came all the way down here, a reversal, and then another drop, but then the drop is lower than the previous one. Okay, so you are still looking at price, you're still looking at what price is doing, so you already have this structure in mind. Okay, so you're waiting for it to be formed. So price pushes back up again and then it drops. When it gets here, it starts pushing. Okay, so all you have to do now is just connect the three downs. Okay, so the first, second, third, you draw a line to connect them and then you extend the line and then you wait to see what price is going to do at the fourth time. So this is the fourth time. Price comes all the way back, and then when it gets to the line that you have drawn, you see price pushing back up again. That is a clear confirmation for you that price is rejecting something here, and that is the trend line that you have here. So all you have to do right now is to look for buy trades. Okay, so you enter barcode. That is the barcode. You start putting a lot of buys somewhere here, a lot of buys. You understand? So once price pushes up, you clear your profits and then you're out of the trade. And what did I say? If price comes all the way back and then it doesn't respect the line that you have drawn, the rising arrow, and it breaks it, what do you have to do? You just have to get out of the trade immediately. Okay, you see, trading is a game of possibilities, as I said. So if the possibility that price is going, because if price breaks this red line and it comes down here, the possibility that price is going to move this direction is higher than the possibility that price is going to move up. So what do? You get out of the trade and then you wait and see what happens to get another entry. Okay, so guys, that is all. So the first one, as I said, is the falling arrow, and then the second one is the rising arrow. So we'll take a look at some examples of the falling arrow and then the rising arrow from our live feed, and then you can base your entries on those things. You look at them and then you see that whatever I am telling you here or I am showing you here is exactly what happens on the live feed. Okay, so let's take a look at a couple of examples of the falling arrow and then the rising arrow.
2 hours later.
Hey, what's good, guys? Okay, so in this particular one we are going to talk about the falling arrow. Okay, so I told you guys we are going to look at the rising arrow and then the falling arrow. So this particular one here is going to talk about the falling arrow. So let's look at some examples. So as you can see here, this particular place, if I get price doing something like this, price comes up here, it comes all the way up, comes down, I see a rejection here. All I'll be looking for is I'll be waiting for another rejection. So if I get something here and I see that I can connect a line from the top all the way to touch the down one, that means I'm looking for sales. Okay, that is a clear confirmation for me to start looking for sales. So at this particular point here, I can start selling here because this is the third touch of my falling arrow. This is the third touch of my falling arrow. So here I can start looking for sales. I input a lot of sales. The barcode. My students know this. The barcode. I start putting a lot of sales here. Once I get this long push down, I clear my profits and I'm out. Guys, I don't stay in trades for long. This is for quick scalping. You don't enter the trade and then you wait for price to move all the way down before you take a profit. You don't do that. You see, once you get the drop, once you get the melt, you just take your profit and you're out. If you don't want to take your profit, you still feel like price is going to drop more, what do you have to do? You just have to move your stop loss to break even, or you move your stop loss into profit and then you wait for it to run. If it comes back to hit your stop loss, fine, your trade closes, you don't lose anything.
minute! Who are you?
You gain at least something small. But if price keeps dropping, fine, you win, you make more money out of it. But what I'm saying is, once I get a drop, at least from this angle here to this place, I just take my profit and I'm out of the trade. I don't wait for, miracles to happen before I take my trade. So let's look for another example. Guys. This is another example. So you see them, like, they are always happening. These things are always happening. So I don't see why trading itself should be difficult. So once you are able to control yourself to wait for structures like that to start forming, you don't have a problem with your entries. You understand? You don't have any problem with your entries. Look at this here. Price started doing this, and if you can connect the line at the top, you know that this line obviously is a falling arrow. So if this is falling, what do you expect? You start looking for sales, right? So somewhere here, even the third touch here, you start selling. You take your profit. Once price starts melting, you take your profit. You can see. So this is the second example. Let's look to see if we can get another example. I always have them on my charts because those are the things that I put on my charts to get my entries. So once I see this arrow, I'm looking for sales. You understand? So I connected the arrow from the top here to touch the top wicks, and then I start looking for sales. At the third touch, I start looking for sales. You understand? So here I input a lot of sales. I barcode everything there, and then I wait for the drop. After I get a drop, I take my profit and I'm out of the trade. You understand? Let's look for more examples. So this is another example. You see, you get a touch here. I think you get like 4 touches here. You understand? But still, there was a fake out, and then so people will ask, when this happens, okay, what do we do when we see a fake out like this? So in the next video, I'll talk about how to spot all these things. Like when it happens, you know what to do.
Do it! Just do it!
Okay, so don't panic. You are going to see stuff like this. There's going to be times that you connect your lines and then you get some wicks that will break the line and still come back down. They are called fake outs. Okay, so when those ones happen, I'll show you what to do. You know what to do at that particular time. Okay, so you don't lose more, and then you stick to your plan, and when you get a clear confirmation, you know when to enter again. Okay, so I connect my line here. This was just a fake out which I'll be expecting, and then after I see this, I start selling. Somewhere here I sell, barcode, I take my profit and I'm out of the trade. There's another one here. As you can see, there's another fake out here. After you connect your line, you extend it, there will be a fake out here. After you get this fake out, as I said, my next video will talk about how to spot those fake outs and then how to re-enter again.
Do it! Just do it!
Okay, so somewhere here I took my sales, and then barcode, I take my profits as price melts. Okay, let's see if we can get another example. So guys, it's always like that. You don't have to stress yourself, looking for indicators and then all those things to confirm your entries. You're looking at price all the time. This is price action, guys. You're looking at it all the time, and you are seeing the candlesticks doing a particular move. Okay, you are looking at them all the time. You are seeing the candlesticks doing something, and then they keep repeating that same thing. So what is stopping you from making money from that movement that the candlesticks are making? So all you have to do is just wait for the structure to start forming. Once you see the structure start forming, you don't have to wait for anything. That is a clear confirmation for you to enter your trade. You enter your trade, you take your profit, you're out. You can see the same thing happened here. The first touch, second, third touch, somewhere here, barcode, I'll be entering my sales, a lot of them. I keep hitting them. Once price drops, I take my profit, I'm out of the trade.
Wait a minute!
I mean, guys, what's difficult about this? What's so difficult about this? This is simple as ABCD, I mean. So let's see if we can get another example. Okay, I think there's another one here. Guys, you can see this. First touch, price came back. Second touch, third touch. Somewhere here, I am there to enter sales. Barcode, I put a lot of sales. I take my profit. Somewhere down here, I am out of the trade. Another one, touches. I see wicks, rejection. Another entry for me. I take my profits. I'm out of the trade. You understand? So guys, just keep your trading simple, and then I mean, you can be making, you know, some cool cash from this. This is not how do you call it, rocket science. This is not rocket science.
Oh my God! Wow!
Once you are disciplined, you stick to your rules, your trading plan, everything goes well for you. Look at this here, guys. Look at this here. Touch, touch, touch. What is it telling you? Barcode. Sell. So I hit my sales somewhere here. A lot of them. Pa 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 pa. The next time price starts melting. I collect my profit and I'm out of the trade. So guys, I think this will be all for the examples. There are more examples. You know, you can just open your volatility index, you know, check more example. As for this particular one, I'm looking at the volatility 100 index, the 1 minute time frame. Okay, so that's what I'm using for this particular example. I trade the 1 minute time frame. That doesn't mean I don't look at the 5 minutes or I don't look at the 15 minutes. I only look for those ones just to confirm my entry. Okay, hello guys. So we are going to look at, you know, some quick examples. You know, this is a real-time feed, right? So we are going to look at some quick examples of the rising arrow. Okay, so right here we have our first example. So as I said, you try and connect, you know, the candlesticks. So as you can see here, we have a first touch here, we have a second touch here, we have third touch here. So once you are able to connect all these things, you can extend the arrow. Once you are able to connect and you see price, you know, trying to hit it, you know, hit it and then move up, then you know that price is likely to move up. You understand? So that's why I have this arrow here, and then after that I have this arrow pointing upwards. That means I'm looking for buy. So somewhere here I'll start buying because I have first touch, I have second touch, I have third touch here. So somewhere right here I'll start buying, you know, inputting my buys, and then I'll start taking profits as it keeps moving up. When it touches again, I can still buy, you know, and you see what price did here. It moved all the way up before it started dropping again. Let's look for another example, guys. Okay guys, so this is another example. As you can see here, this is another rising arrow. You can see we started drawing the arrow from down here, and then we extended it all the way up to this level. Okay, so I saw this first one, and then I saw this candle rejecting again. So this will be my second rejection, and then the third one here. So, you know, I just drew my arrow and I extended it, and then you see what price is doing. Price is actually respecting the arrow that I have drawn here. You understand? So you can see another respect here. So, you know, anywhere here, you know, I can start buying, or probably when I get this particular one here, you know, I'll start buying from this region. I'll start buying, you know, inputting my buys. I mean, those who are in my Telegram groups, you see the way I enter my trades. You know, I call it barcoding. You know, I just input the trades, you know, plenty of them, because, you know, I have my confirmation here that price is going to move up. I have my rising arrow here, and price is really respecting my rising arrow. So what's really, you know, stopping me from entering buys? You understand? So I just input my buys, and then exactly as I said, you see what price did. After this rejection, it just, you know, shot up to this, you know, extent, and then it started dropping again. So guys, let's see if we can get another example. Okay, there's another example right here. As I said, you know, first touch, second touch, third touch, you draw your arrow, and then once it is a rising arrow, what are you expecting? You are looking for buys. Then you start inputting your buys, and then you can see what happened here. So trading volatility index is actually simple, guys. You don't need indicators and then all those things to try and trade volatility index. If you try doing that, you complicate your trading and then you make things difficult for you. But once you keep it simple, you follow price action, you know what you are doing. When the candles are moving, you know like what is about to happen. I mean, you keep your trade simple, and then you're always taking profits. You understand? So that's exactly what happened here. After I drew my line, I started inputting buys somewhere here, and then price shot up. I took my profits, I got out of the trade. It's as simple as that. It's as simple as that, guys.